Welcome and thank you all for joining us today. Today's webinar, 2020 Tax Filing Changes with the CRA, will begin shortly. But before that, I'll make a few technical notes. On the webinar panel, this is a blue or orange flower icon on your screen. And today's presentation, where you can open and save for later, as well as you can follow along during the presentation. You'll also see a questions pane where you can enter your questions for our panelists today, and we will do our best to answer as many as we go live. Following the presentation, you will receive a recording of today's webinar, so don't worry about frantically taking notes, and this will be available for you to go back and rewatch if needed. And with that, I will now introduce Laura Jones, our Executive Vice President and Chief Strategic Officer. Thank you, Laura.
Well, good morning or good afternoon, everyone, depending on what part of the country you are joining us from. Welcome to a special edition of our weekly webinar. So we've been having these webinars for, I think this is our 38th week, and today we're very pleased to have CRA as our special guest, as it's that fun time of year. Tax time. I think on our last webinar we had a quote from Albert Einstein saying that taxes are the most complicated, difficult thing to have to do. So don't feel badly if you're frustrated with your taxes. Even Albert Einstein struggled with them. I am joined. We'll get to introducing CRA in a moment. Corinne is also with me today, and the two of us will be moderating. And we're going to skip some of our usual updates. There's not a lot to update people on Corinne this week, other than in terms of what's new policy-wise, other than good news out of Quebec and Alberta that some of the restrictions have been lifted, but that's the main news. Of course, we've been busy writing letters and meeting with policy advisors, but we'll update you on that on a later webinar, because we want to really get straight to the meat of the matter with CRA. So Corinne, I'll keep you up because we're gonna get straight to you in a minute. But just to quickly introduce ourselves, I'm the Executive Vice President, and Corinne is the expert in all things Ottawa. I know many of you have met us before, but we together we manage a lot of the legislative part of the operation, and we work very closely on research and some of the other operational sides of CFIB. If we go to the next slide. We have a number of people, and Corinne, you know, I know you're very instrumental in making this happen. So we have a number of people joining us from CRA today, and we're going to introduce Costa, Laura, and Jennifer, who are all going to speak to different pieces of what's changed in the 2020 tax filing in just a moment. But just to let all of our members know, this is a huge compliment to you that we have all of these folks from CRA who are here to hear what kinds of questions you have, and also to support our main speakers in answering your questions. So of course we'll get to as many of them as we can, but we'll also be working with CRA on any questions that don't get answered, and we use those to update our website and our FAQs. So, but we're going to get to as many as we can, aren't we, Corinne, today?
We're certainly going to try, for sure.
We're going to try. Next slide. So the key topics that we're going to cover today are the income tax filing deadlines and those COVID-19 measures specifically announced in 2020, how that affects your taxes. So we'll get into that in a minute. And of course, your questions. We continue to tell people that keeping a business journal is a best practice to keep track of all of these things that you're doing. Take some notes on things that you might want to remember. And Corinne, I'm going to turn it over to you now to talk about the income tax filing deadlines, and then to introduce our guests.
Great. Thanks, Laura. And hello, everybody. I'm glad you could join us again today on this special webinar. Before we jump into CRA, which will take up the most of this, we wanted to just remind you on the next slide, please. There we go. Just what some of the current deadlines are for the various types of tax filing. For individuals, it is April 30th right now, both for filing and payment. For corporations, as you can see, it really does depend on your year end, but it has to be within 6 months after your year end. Self-employed, there's a slight difference for those that are self-employed. You have to file by June 15th, but you have to pay by April 30th. So it's one thing that's really important for those that are self-employed to make sure that they understand that there are two different dates for those particular things. And the more important one paying is April 30th. And then, of course, there's the various ways that you have to pay your GST, depending on, of course, how much GST you may actually collect. So those are the details there. That is the normal filing deadlines. I wanted to also sort of reiterate the fact that we've increasingly been hearing from our members and from our accounting members that it's going to be tight this year to get these deadlines in at the time that they're currently set. And so we have been pushing already for CRA. We sent a letter last week to CRA officially asking for some deferrals when it comes to the individual and corporate income taxes, as well as for the GST. Well, hopefully we're going to continue to put pressure on them to think about that as we get more and more calls coming in of people really worried about whether you're going to make these deadlines. Of course, this would also include things like T4 filings, which are going to be due by the end of February, which we're going to talk about today as well with CRA. All those things, as of right now, are at the normal deadlines that they usually are, but we are, as an organization, CFIB, pushing for those to be potentially pushed off a bit further down so people have a bit more time to prepare, given the complexities that are going to be involved in this year's filings. So let's get into CRA's presentation, and we're going to bring up our first speaker, and that is Costa Dimitrakopoulos. So Costa, if you can, perhaps you can join us. There you are. And Costa is going to walk through one of the big changes around home office expenses for employees. So over to you, Costa.
Thank you very much, Corinne. And hello, everyone. My name is Costa Dimitrakopoulos, and I'm Director General of the Income Tax Rulings Directorate at the CRA. And I've got 3 or 4 slides, I think 4 slides, and I've got speaking points of about 5 to 7 minutes that are not necessarily in sync with the slides, but we'll cover everything that is on the slides as well. So I'll begin. Due to the COVID-19 pandemic, many Canadians have made a fast and unexpected transition to working from home, either full-time or part-time. In fact, millions of Canadians have needed to set up a workspace in their kitchens, bedrooms, and living rooms. Many of these Canadians would be eligible to claim a deduction for home office expenses for the first time. The Minister of National Revenue, the Honourable Diane Leboutillier, announced details about a new method to calculate the deduction for home office expenses that will ease the burden on these employees. This new temporary flat rate method, applicable only to the 2020 tax year, allows Canadians to easily calculate their deduction for modest home office expenses. This new temporary flat rate method will allow eligible employees to claim a deduction of $2 for each day they work from home in 2020 due to the pandemic, up to a maximum of $400 for the year. Under this new method, employees will not have to get Form T2200 completed and signed by their employer to certify their conditions of employment, nor will they be required to keep documents to support their claim. By not requiring employees to get a completed and signed Form T2200 from their employer, we have addressed the concerns raised by some businesses during the agency's stakeholder consultations regarding the somewhat burdensome and disruptive administrative process. This new method may be used by employees, either salaried or commissioned, who worked from home for more than 50% of the time for a period of at least 4 consecutive weeks in 2020 due to the COVID-19 pandemic. This method can be used even if an employee is reimbursed for some of their home office expenses by their employer, as long as the employee meets the eligibility criteria. Employees with larger claims may still choose to use the detailed method to calculate their deduction for home office expenses, but must get a completed and signed Form T2200 from their employer and keep documents to support their claim. An employee will then request their employer to complete and sign Form T2200 to certify their conditions of employment and that they were required to pay for their own home office expenses. This form is not filed with the employee's tax return, but the employee must keep it in case the CRA asks for it. As in the pre-pandemic situation, it is up to the employer to determine who is authorized to sign the Form T2200. Also, an employee who meets the eligibility criteria can still use the detailed method even if their employer has reimbursed some of their home office expenses, but they cannot claim any expenses that were or will be reimbursed by their employer. Under the detailed method, eligible Canadians can claim portions of their electricity, heat, water, internet, and maintenance costs that they paid for the period they worked from home, as well as certain office supplies and telephone bills that they incurred for employment purposes. The amount of this claim will depend on various situations like the ownership status of the home and whether the employee has a dedicated workspace. In support of Canadians who are working from home and in alignment with our People First philosophy, the CRA has created a simplified Form T2200S called the Declaration of Conditions of Employment for Working at Home Due to COVID-19. Additionally, the CRA has created a simplified Form T777S called the Statement of Employment Expenses for Working at Home Due to COVID-19. Finally, the CRA has introduced an online calculator designed specifically to assist with the calculation of home office expenses. The easy-to-use calculator allows Canadians to estimate their deduction for home office expenses based on their personal circumstances and can help them evaluate which method is more advantageous or appropriate for their circumstances. We have also released a list of common home office expenses that will help employees determine what items they may be eligible to claim as expenses and clarifies which items cannot be claimed as expenses. I would like to note that people who are using the temporary flat rate method or using the detailed method along with the new simplified forms cannot claim any additional employment expenses like motor vehicle expenses. Employees who are using the detailed method and are claiming other additional employment expenses must use the regular Form T777 and Form T2200. Employees who choose to use the detailed method should ensure they have certain information to complete their claim, including the total size of their workspace and the total size of their home, records for all expenses they incurred working from home in 2020, and a completed and signed Form T2200S or Form T2200 from their employer. CRA understands that COVID-19 has meant that millions of Canadians who do not normally work from home have been doing so at one point or another over the past year. And I'm proud to say that this new temporary flat rate method and calculator help meet the needs of Canadians today. And now I'll turn the floor back to Corinne. Thank you.
Hi, Costa. I think we're going to pause here, and Reem, if you can kind of just move the slides to the questions. And I know Costa had just said that he wasn't speaking directly to these slides, but there's good content there if you want to refer to that. But let's get to some questions on the on this part of it, on the claiming working from home expenses. And I've got one here from Megan Costa. Megan has previously sent in a T2200, and she's asking whether she can switch this year to the simpler formula for the $400, and then next year, assuming all is well, go back to the T2200 form. So that's Megan's question. Can she basically use the simple approach this year and then go back to the other lane next year?
Thank you for that question, Megan. If Megan was working from home prior to COVID-19, she wouldn't be able to use the simpler approach. She would have to use the T2200. If she was forced to, if this was the first time that she was working from home as a result of COVID-19, then she could use the simpler approach.
Okay, so she would, yeah, okay, thank you.
Well, that's an important distinction. I just want to make sure that everyone got that. Is that if you use if somebody has used the T2200 before from their employer, they have to continue to use that method. They cannot use the new method. That's only for anybody who's never used it before. Okay. That's enough.
Okay. So hopefully that answers your question, Megan, and thank you for that clarification, Corinne. Grace is asking, or sorry, let me go to Diane's question first. What if someone worked at home for 6 weeks, then at the office for 2 weeks, then back home for 4 weeks? Can you claim the $2 per day for those 10 weeks?
Yeah, basically, if the person worked the majority of time in a period of 4 consecutive weeks, and if they met that principally test of more than 50% of that 4-week period working from home, then they can claim the $2 for those days that they worked from home during that period, plus any additional period. So as long as they meet that test one time, then they can claim the $2 for any other additional day that they worked from home.
Great, thank you. Hopefully that helps, Diane. It sounds like you have that 4-week period, that 1 4-week period, so she should be okay to use the $2 formula. Okay, Corinne, do you have some that you want to throw out?
I do. Yeah, I do. I just want to, more coming in, so I'm losing my, here we go. So Rhonda was asking, can both spouses claim home expenses if they both work from home due to COVID-19?
Yes, they can, provided that each of them are eligible to meet the eligibility requirements. They can.
Okay. Fairly straightforward.
And Tracy is asking, what support do you need to claim the $400? What will CRA ask for?
You don't have to provide any supporting documentation. You don't have to calculate space. And now I think so basically there's very little that the person has to do other than to indicate how many days they work from home, and then they'd be able to claim $2 per day. That said, I'd like to defer to my colleague Craig, because he may have some information from the verification side in terms of what CRA does in terms of potentially.
Of course, it's the audits that people worry about, right? What do they need to show the proof?
Yeah. So I don't know if Craig has anything to add.
Hi, folks. Sorry, I think there's a little bit of lag connecting me. But no, everything you've said, Costa, lines up with what we've been telling people as well. Basically, as with anything, employers should be keeping logs of if employees have been working from home or if employees have been working in the office. On taxable benefit side as well, that's going to be important to have if we ever came back to substantiate, where your employees were and why you chose to classify things a certain way. From the employee side, as you said, they fill out the form, they say how many days, as long as there's records, if we ever came back that could substantiate that they actually worked at home for that many days, we're going to be okay on the audit side.
So Craig, I think that this raises a good question though, like what constitutes proof? Like my husband saw me working at home, and people do worry a lot about CRA audits. We've been advising people to keep a business journal and sort of just keep track of the dates and any important decisions they're making. And you just mentioned a log. Is that going to be, sufficient evidence for CRA?
So I don't want to overspeak on the exact specifications of what a log would look like, but essentially, as we said, like something that you're suggesting is best practice that we've kind of been advising as well, is keep a journal, write down important things. If you have a record that says, I was asked to work at home or I had to work at home from, March 20th to August 30th, that's probably going to be more than sufficient for, again, barring some specific circumstance, that's going to be more than sufficient in 99% of cases, I think, for our purposes when we're looking at a file.
Yeah, so a little woot woot for that best practice tip that we've been giving everybody for a while. Just keeping a journal, a log of kind of important things is, and dates can be very helpful. So thanks for answering that. Hopefully that helped. Corinne, what do you have now?
Yeah, so I have Ellie asking, does the employee have to request either the T2200 or T777S, or does the employee have to approach the employer and ask them if they would like some of these forms for filing their 2020 tax filing? So where's the obligation? Is it on the employee, the employer, to get these forms?
I'll start and I'll see whether some of my colleagues want to jump in. If the employee can decide which method they want to use. If they use the simplified method, the flat rate method, then they don't need to ask for a T2200 or T777. With respect to if they do want to, well, I should say they don't have to claim a T2200. In terms of the if they do want to use the detailed method, then it would be up to the employee to ask for the T2200 from the employer. The simplified, if it's just for COVID related or home office expenses and not employee expenses, not expenses related to automobiles, just home office expenses. The T2200S has been simplified such that the employer has 3 simple questions to answer, and they're yes or no questions. One is, did the employee work from home due to COVID-19? Did you or will you reimburse the employee for any of their home office expenses? And that's key, home office expenses, and what is a home office expense for our purposes and what is not. So for instance, things like computer equipment, fixed or capital equipment would not be regarded as a home office expense. We would be looking for things that are consumable or things like utilities. And thirdly, was the amount included in the employee's T4 slip? The employer would certify that the person worked at home due to COVID-2020. In 2020 due to COVID-19 and was required to pay some or all of their home office expenses. And they would certify it to the best of their knowledge that it was correct and complete, and would provide that to the employee.
Okay, so again, though, it would sort of be the onus would be on the employee if, you know, because most employees were assuming, and again, I don't mean to put words in your mouth, but most employees were assuming will likely take up to $400 or $2 per day. And if they do that, there's no involvement from the employer whatsoever. They are claiming that on their own taxes. So it is somewhat on the employee to go to the employer if they decide they want to do a large, say they think the claim would be larger because they invested more. It would be up to the employee to go to the employer and say, okay, I need this form in order to file this particular larger claim. Would that be correct?
That is my understanding. I'm going to check with my team there. Laura, do you have anything to add?
CRA, Laura.
Laura.
No, it takes a second to come off.
Sorry, Laura.
No, that's okay. Yeah. And Chantal, I see she's popped onto the line as well, and maybe she can help out. But I think one piece that I noted when Corinne was talking was about the fact if an employee is using the 777 short, claiming the flat rate amount essentially, is that they would need to ask their employer for the 2200 short. Right. So I think what you were saying there, Corinne, was that there was no need for implication on the employer's part. And I don't know that that is full on accurate. So I just wanted to clarify that, and Costa can absolutely correct me, but maybe I'll turn it over to Chantal, who works in our collections and verification branch, to add some detail on that one.
You're on mute, Chantal.
Thank you. I'm sorry. Okay. Just to clarify first that if someone is claiming using the flat rate method, that's correct. They don't need to have either the T2200 or any T2200S completed by the employer. If they use the detail method and using form T777S, so the shorter version, they will need the T2200S. And if they claim the detail method with not only home office expenses due to COVID, but other employment expenses as well, they would use the regular form T777, and they would therefore need the complete T2200. As
Perfect.
for the onus to who should request the form, the T2200S, yes, since the employee is the person who's well placed to know if they'd rather use the flat rate method or the detail method, it would most likely be to the employee to go to the employer and ask for the T2200S, which is, as Costa said, a simpler form, only 3 questions. And we hope that the employer would be happy to help their employee to receive everything they are entitled to, so they would complete that form for them, because the employee do need that form to be able to claim.
Okay.
So just on that, I have one more follow-up question that's related to that. I don't know what advice you would give, but we've got a question from Scott about what if your employer won't sign the form? So I'm assuming this is the more complicated form that they need to sign, obviously, but do you have any advice for people in that situation?
You want to go ahead, Costa?
Yeah, I'll start, and then if Chantal or anybody else wants to jump in, we would hope that if it's a COVID-19 situation, so it's work from home, we would hope that the fact that you have a 3 simple questions would make it easier for the employer to complete this, and would want to help the their employees get what they deserve. We cannot, there is no, can't force the employer to do it. It is a requirement, though, in terms of the person using the T2200, that they need the employer's certification. So we would hope that they would. I don't know whether Chantal has anything to add from a verification point of view, whether they would, call up the employer and ask why they're not doing it. But I'll defer to Chantal on that.
As Costa said earlier, the T2200 and T2200S, although it should be given to the employee for filing season, so they know that they have everything that they need to request or claim an amount, an employment expense, they are not required to file a T2200 or T2200S at the moment they file their return, just if CRA asks to see those forms. So, of course, it would be better for them to have it upfront, but if they are reviewed and they don't have the form and the employer doesn't want to provide the form, we will try to work with the employee, maybe contact the employer, or see if they have a contract of employment, other documents that could support that they were required to work from home and they were required to pay for their expenses. We'll do our best, but we really hope that the employer will work with the employee on that front.
Thank you. Now I'm going to have to, I think, move us along a little bit, but I will just maybe sneak in a few more quick ones, Costa, and then we've got to get to your other colleagues. One from Davina: if I work on a 2-week rotation, will I qualify for the $2 day? I suspect that's going to be a question a lot of people have, like, what if you don't have the 4 weeks consistently? So that's one to put to you.
Yeah, basically what we're looking at is a 4-week period. Do they work during that 4-week period more than 50% of the time at home? We're not saying they have to work 60%. We're not saying they have to work 70%. We're just saying you have to meet that threshold. So, as long as they work, let's say it's a 4-week period, and as long as they work a little bit more than 50% of that time, then they meet that threshold, and then afterwards they can claim additional days for that year.
Can I just sneak one in too, real quick? So I have lots of questions on this, so I'm just gonna ask one, but we're getting a lot of this. It's the folks who are, what if you're the business owner and you move to working from home? No, that's not the one I wanted to do, but it's similar to this, but it's the same idea that people who have a small business and are claiming home office expenses for that business, but they're also employed and had to work from home since March. So would you be able to claim home office expenses for work, or is that already included in the small business claim for home office expenses? So there's a lot of questions around what if you have both situations?
Yeah, in terms of having both, what ends up happening is the rules are a little bit different for each one. Okay. So, and consequently, they'd have to, we're talking about the rules for employees and both commission employees and salary employees, but there are specific rules for self-employed individuals. And there is a website on the CRA website that refers to self-employed individuals. I just don't have it on me. I think what we'll try to do is provide you with that information after.
Okay,
after
that would be great. Yeah, that would be great. Okay, we'll have to try and get back to folks on that particular question, and we'll try to follow up either by the end of this one or at our next one next week to make sure that we're getting correct information out to those folks. So maybe we should move on, Laura.
I think we should move on, and I think it's CRA Laura who's up next, if I'm not mistaken, and so we'll move along. Thank you very much, Costa, for your help with this part of the presentation.
Thank you.
Thank you. And it's unusual that there's more than one Laura, but kind of nice on this call. So I'm Laura Furlong-LaChapelle. I'm the director responsible for information programs, which translates to forms and publications, essentially, for assessment benefits and services. So there were a couple of topics I know there was interest in hearing about today, the first of which is the T4A. So you can go ahead to the next slide, which has the details about the T4A on there. And basically the change to highlight here on the T4A is that there have been 7 new codes introduced or added to the T4A for the 2020 tax year. And these are specifically related to emergency response benefits. So loving our acronyms, but spelled them all out here for ease of reference. Canada Emergency Response Benefit, the Emergency Student Benefit, the Recovery Benefit, Recovery Sickness Benefit, Recovery Caregiving Benefit, and the Provincial Territorial COVID Financial Assistance. So, you know, as you go on through the slide there, you'll also see that certain amounts that a provincial or territorial government has paid as financial assistance to support individuals affected by COVID must be reported on that T4A slip. And just before we look at those codes specifically and where you find them on the slip, I will refer you to as well the employer guide, which is the RC 4157 about deducting income tax on pension and other income. So that'll be a helpful guide when looking at that slip. So in fact, we can go pretty quickly to the next slide, which is the front of the T4A slip. So you'll have learned to recognize that one, I'm sure, but it's also available currently on canada.ca in electronic format if you'd like to take a look at that there. But where you will in fact see the changes on the reverse side of the T4A. So if you go to the next slide, you'll see there where those new boxes are highlighted, and they're surrounded by that red box on the slide for ease of reference, and it gives a description of each one of them and what they're referring to. So then if we go ahead to the next slide, we're getting into the T4A. And again, on the T4A, sorry, not the T4A, the T4 slip. The T4 is, again, that there have been more boxes introduced. So we can go ahead to the next slide where we start talking about that T4 slip and the introduction of boxes 57 to 60. So these are related again to emergency response benefits. So we have CERB-Qs, which is the wage subsidy, and the student benefit. Those are all referenced there. On the slide as well, you'll see what each of those boxes or codes represents. So the new information codes are going to be used by employers when reporting income and retroactive payments. And you'll see code 57, so each is for a period of having received the emergency response benefit, March 15th to May 9th. I won't go through each one of them, but it sets up each of those periods. And one of the most important bullets I would think on this slide is really about the importance of noting that 2020 T4 slips that have already been filed, you will not have to refile. So they're already filed there. And if we go to the next slide, you'll see the front of the T4 slip. But if we immediately go to the next slide, that's where you'll see the back side or the reverse of the T4, where again, those codes are specifically referenced. So you don't need to necessarily have these slides to understand what those boxes are referencing. They're right on the back of the slips themselves. So again, this one is on the canada.ca site and posted up there, so it's readily available. The last topic that I'll speak to, so we can go ahead to the next slide, is 2020 COVID-19 related assistance. So you can flip right away to the next slide that talks about the general rules regarding COVID-19 related assistance. And this is applying to self-employed persons or to businesses who file a T1 or T2. If you received federal, provincial, territorial government assistance in 2020, like the wage subsidy or the rent subsidy, the amount received is taxable. So it's to be included in income immediately before the end of the claim period to which they relate. So then it goes on to talk about if you've received a government loan like CEBA, the Emergency Business Account, or the Canada Emergency Commercial Rent Assistance, include in income any portion that is forgivable in the year in which the loan was received. We've also provided some additional information. I know not included here because there was specific interest on COVID-related impacts. But if you do go to the end of the material that's provided annexed, there's some additional information on non-COVID changes to tax filing for 2020, as well as COVID-related information on TWS and PD 27. The reps couldn't join us today to talk about it, but the information is there. And if there are questions, of course, we can get back to you after the fact. I think that'll wrap it up for me. And I'm going to pass it on to Jennifer Martin, who's going to speak about capital cost allowance. And then both of our topics will be open to questions following that. So over to you, Jennifer.
Perfect. Thanks so much, Laura. So I'm one of the liaison officers with Canada Revenue Agency. I'm just going to talk about CCA and hopefully give you a bit of insight about that. If I can just get you to move to the next slide. Awesome. So CCA is our capital cost allowance short form is CCA. CCA is a deduction that can be claimed over a number of years when depreciable property has been purchased for the purchase of carrying out your business activities. Depreciable property is property that wears out or becomes obsolete over time. Examples are buildings, furniture, equipment, tools, and vehicles. Capital expenses provide a benefit to your business activity that usually lasts for several years. An example would be costs incurred to purchase, improve, or upgrade a capital item. Generally, costs incurred to purchase assets that provide a lasting benefit cannot be claimed in full in the year the items are purchased. Depreciable property is grouped into classes, and the CCA is calculated using a prescribed rate that generally reflects the useful life of the assets included in that class. The costs are reported on the capital cost allowance schedule, and a calculation is completed to determine the allowable expense that is deducted each year as capital cost allowance expense. CCA expenses can include the purchase of rental property, the legal fees and other costs associated with purchasing this property, and the costs of furniture and equipment purchased to have available in the rental property. Can we go to the next slide? Awesome. So this slide demonstrates the difference between current expenses and capital expenses. So current expenses are generally those that are incurred for items that are used up in the course of the year or costs associated with repairs to maintain a capital asset. You can claim these costs in full in the year the expense was incurred. So and examples are materials such as pens, paper, pencils, insurance documents, purchasing your business cards, that sort of thing. As I mentioned earlier, capital expenses are those that provide a lasting benefit. The costs for these cannot be claimed in full when they are purchased, but claimed over a number of years at a rate or percentage, depending on the class of the item. For example, instead of painting the wood exterior of a building, you decide to put exterior vinyl siding on the exterior of the building. So this is giving the structure a lasting benefit. Another example is purchasing a new computer or a laptop or a vehicle that's used for business purposes. In the current environment, business owners have had to incur a variety of additional costs associated with the pandemic. So some of these costs would qualify as current expenses, such as hand sanitizer, personal protective equipment, masks, supplied to your workers and clients. Other significant costs, such as changes to ventilation systems to reduce disease transmission for workers and clients, would be classified as a capital expense. Can we move to the next slide? So the accelerated investment incentive was introduced a few years ago. It applies to eligible property acquired after November 20th of 2018 and must be available for use before 2028. Prior to November 20th, 2018, any new additions to CCA classes were subject to the half-year rule. This means that CCA expense for the first year was applied at half of the rate, so you didn't have to figure out how many days the expense was or the item was owned in the year. Everyone got a half year's worth of the CCA expense. The Accelerated Investment Incentive, or AII, provides an enhanced claim in the first year for certain eligible property. It uses the same CCA rates for the class of the item, but allows you to claim up to 1.5 times the net addition to the class for the year, and the half-year rule wouldn't apply. Capital cost allowance has many rules, and there are a variety of things to keep in mind when claiming it. The CRA website and publications provide a lot of information regarding capital cost allowance. And while we've highlighted some of these here, you should always consult your tax professional and your accountant about your own planning needs. As liaison officers, we provide assistance to small business owners to help them understand their tax obligations and answer their tax-related questions. So you can request a visit with one of our officers anywhere across the country at our website at canada.ca/CRA-liaison-officer. And I think the information there is good to have handy. I'll now pass it back to Laura and Corinne. Thanks, guys.
Thanks. Great. Well, we're at the point where we're going to get to as many questions as we can. I'll just remind everybody that our commitment to you is there, that we'll keep our website updated. And Corinne, I know we'll be doing some follow-up with CRA after this for any questions we don't get answered, and we'll try and cover some of them off on our next webinar. So just because we do have a lot of questions, and then you can see CRA's resources there. And there's some additional information, I think, in the appendix of this deck, Corinne, that we wanted to mention. Do you want to mention that?
Yeah, so in the appendix are a few extra slides that we know there's been a lot of questions around. CRA was kind enough to provide us with a bit of FAQs, for example, on the temporary wage subsidy, or also known as the 10% wage subsidy, and the PD27s. We've had a couple of webinars focused on that already, but there is some Q&As in the appendix that go into a bit more depth on some of the questions that are coming up more frequently on that. There's also a few slides on some of the other changes that have been made in 2020 that may impact a smaller proportion of you. For example, agri-stability, agri-invest. There's a couple, I think a slide or two on that, and some of the changes that have taken place there, as well as some of the capital cost allowance changes, specifically around zero emission vehicles and that kind of thing that have been added. So those are some of the other changes in 2020 that have been sort of brought in that may affect a smaller proportion of folks that we wanted to make sure that was in the deck, but we didn't necessarily think we had time to get into depth here during our presentation today. So please go ahead and check that out if that applies to you, and we can certainly try and see if we can find answers if you have questions on any of those things as well.
Great.
All right, guess we should jump into it, huh?
Yeah. So Jennifer and Laura, if you wanna, Laura, if you wanna, CRA Laura, if you wanna join us again, we'll take some questions that have been coming in, and maybe I'll start with Jennifer's question. Am I correct to assume that the T4As related to COVID government assistance amounts, CERB, et cetera, will be issued by CRA?
I can answer that. I think that's more Laura's purview, but yes, T4A slips are being issued for any benefits that that people were receiving.
Great. Okay, Corinne, do you have one?
We're getting a lot of, we're getting a lot of questions around the timing of when you claim the subsidies, right? So here's a typical one. Should amounts claimed under the wage subsidy SUS and rent subsidy CERS be accrued in the claim period then they relate to, even if the amounts may not have been received in that claim period? So for example, obviously, if you are applying now for last September, but you got the money in 2021, when do you apply that money to your taxes?
Well, I'm fortunate enough to have one of my colleagues on the line today, and that's why we had something of a long list, because we have quite a few topics that kind of cross over. So I will ask my colleague Rachel if she's able to answer that question, and if we can't answer it fully, we will take it away. So Rachel, did you have any answers for that?
Thanks, Laura. Unfortunately, with respect to receiving, with respect to applying for benefits, but only receiving the amounts in a future tax year, it's not really something that I can respond to today.
Okay, so we don't have an answer then. If you don't, okay. All right, so that'll be one that we'll have to get back to folks on. So if you're, so it doesn't necessarily apply. So at this point in time, we're not sure whether the amount that you received is applied to when the amount that you applied for, or when you actually received the amount. So that's the piece we're still unclear on. Okay. All right, folks, I know there's a number of you that have questions related to that, so we'll have to find an answer for you and try to get back to you, because I have, I think, a dozen at least questions around that sort of theme. So
I'm sorry, Corinne. Sorry, this is Rachel Shanks again from the CRA. So just to clarify, are we asking about anything related to the CERS and the SUS payments?
Yes. Yes.
Okay. Yes.
Yeah.
Yes. So for that one, unfortunately, I can't respond on that.
Okay. I know for CEBA, it's a bit different. On that one, you have to claim it as you received it. When it's when you receive the money, even if it doesn't necessarily apply until it's a couple of years later. But on the SUS and CERS, that's the part we don't have an answer on. Okay. All right, folks, we're going to have to get back to you on that one, and we'll make a note of it. So CFIB, Rachel, this is one that you and I will follow up with CRA on and try to get an answer in the coming days. Okay.
Yeah, that's important, because that's come up on previous webinars as well. There's confusion about the timing of various things. At least we have the CEBA loan one clarified now, I believe. Yes, the CEBA loan is clarified. That one, you have to apply it in the year that you receive it, correct? CRA? Even when you receive the loan, not the actual forgivable portion. That's the piece that's been confusing for our members. And while we have CRA with us, maybe it's worth just clarifying that one and making sure we have that absolutely correct. It was on your earlier slide, Laura, CRA Laura, I believe. So that you must claim the CEBA forgivable portion in the year you get the loan, even if you haven't received the forgivable portion yet, because you haven't repaid the loan yet. I mean, you haven't, it's not technically it's confusing, right? You've received it as a loan, but you haven't.
Yeah, and that's exactly how in the slide in the deck. So if you've received a government loan like CEBA, or the other one referenced is the Canada Emergency Commercial Rent Assistance, include in income any portion that is forgivable in the year in which the loan is received. So it really goes back to in the year in which the loan is received.
Right, so even if you have to pay back the loan, so technically there's a chance you might not actually get the forgivable portion. That's the piece that has been confusing, and I think you've clarified it now, but I just want to make sure we've got that clear for our folks on the webinar, because there's been confusion about that one.
Okay, and we'll make sure to get back to you about this. It does get quite technical, right? And I'm a forms and publications expert. What I think would really be helpful is if I can tap into maybe some of Costa's colleagues in terms of legislation and interpretation. I think that would be really helpful. So that's what I'll do after the call today, and make sure that you guys have an answer that's crystal clear for your members as well.
Not a problem, Laura. Just send me an email, and I know the team that worked on the CEBA, so no worries.
Thanks so much, Costa.
Great, thank you. Okay, Jennifer, your example of roofing actually sparked a few different comments from people. So Elena is just saying that if a property is held for 20 years, we usually expense the new roof because it's needed to maintain the property. And then Lisa is commenting that on the capital cost allowance issue, that if vinyl siding was purchased and cost less than $700 and was installed by owners, is it still a CCA cost, or is it a repair maintenance cost? So is there some, I think her question really is, there some threshold you're looking at for the amounts that are spent in order to use the capital cost allowance? But just a couple of roofing comments.
Roofing, I'll maybe defer to Janet, but just for technical confirmation. But the threshold that we usually use is about $500. So if an asset is $500 or less, the work put into calculating that out is just usually too complicated and more time consuming than necessary. Anything over $500 is when we want to put it back onto the CCA schedule. So just think about whether it's actually a repair, or if it's, you know, improving or providing that lasting benefit part to your asset.
Great. I have another one, Corinne, and then I'll go to you. This is a question from Julie. It's kind of a general question, but I think maybe you can comment on this. How are self-employed persons treated? Are they employer and employee at the same time?
Who's that for?
I think probably that's for CRA, Laura.
Unfortunately, I don't know that I can answer that question, actually. An employer, like, I think that, again, we have a question of interpretation. So I'm not in a position to provide an answer. I know there are several colleagues on the line, so I invite them, if someone is in a position to provide an answer, that they can go ahead and speak freely. Otherwise, I'll take comment and get back to you.
Laura, it's Kelly Williams. Can you hear me?
Yes.
Perfect. I think we would need, you know, a little bit more context. How are self-employed treated, employer or employee, in the context of what? Are they claiming home office expenses? Are they claiming CCA? Or, like, in the context, I think a greater clarity around the context of the question would probably be very helpful.
Okay, so Julie, if you can provide a little more context, we'll try and come back to your question. But I guess in general, the question might be: are there any flags where or any general things people should know about that? But we'll see if we can get some more detail from Julie. Corinne, what else is in your bucket?
Sure. Sorry, Janet, did you want to say something?
Yes, hi everyone. I just wanted to add, I'm Jennifer's colleague for the liaison office team, and I think I've had this question before, and I hope Julie does add a bit more context to that. But There's always the question about the separate legal entities. So when you are self-employed, you are the same person. So you have, you don't need a separate bank account for your business. Everything that you own, the business owns, so you're the same legal entity. So if you're an employee or self-employed, you're the same person. So you don't pay yourself a payroll, whatever income that you collect that goes into your bank account you could use. It's when you are incorporated that you are two separate legal entities, and two separate legal entities, then you have two separate bank accounts, and then there's limited liability. The company would then choose to either pay the shareholder in dividends or a salary, and there's different ways to take money out of the business. So that's where we see an employee and shareholder relationship. But in the context, I think that the question wasn't asked is a self-employed individual, employee, you're the same person. So that is the case.
Thank you. That may be what Julie was asking. So because that she was asking specifically, are they treated as employer and employee at the same time? And I think you're saying yes.
Yeah, you're the same person, exactly.
Okay. Thank you. Thanks, Janet. I have Denise asking, so I have a couple sort of more admin around the T4 questions. Denise is asking for the new wage boxes on the T4. Is the wages entered in the boxes based on when the wages were earned or when the wages were paid? Laura, is that something you can answer?
Unfortunately not. I was really hoping that some of my colleagues might be able to jump in on some of these questions, but it looks like, oh, look, Craig. Wonderful to see you, Craig.
Sorry, my mic took a second. Yeah, happy to help with this one. We have got a lot of questions about this, so you're not the only one asking this. In terms of how they're reported, we've tried for clarity to line it up as much as we can with the rules around box 14. So same kind of idea. It's all three programs, and you're reporting the amounts that are paid out to employees based on whether that's salary or retroactive payments, based on when those payments are made. If you Google, code 57 to 60 right now, I can't give you a link right now, obviously, because of the format, but we have a web page up that kind of talks about these codes, and it actually has some examples on there that kind of, I think, make that a little more clear. But again, we do understand sort of where the confusion has come from around that, and
so
hopefully that provides a little help.
Right.
Pardon?
So basically what you put into those boxes is what you paid out during that period, or what that employee earned during that period?
What was paid out is the correct. So again, we've tried to align it with box 14. So like box 14, what year did you earn the income is always based on when did you receive it, not, I earned it 3 years ago. And we've tried to do a similar thing with this to hopefully reduce some of the confusion and ambiguity around the issue, and hopefully this helps a little. Again, there's a good example online that I think makes it very explicit on canada.ca, and hopefully that provides some assistance.
Okay. I'm going to try one other question, though. It may run into some similar issues that we had with the previous question. I'm going to try it and see if there's anything that you guys can respond to. But Kent was asking, they received the wage subsidy benefit. And what if the company has a year end of July 31st, 2020? So they got the wage subsidy benefit, but they didn't apply for that wage subsidy until December, but it was for the period prior to the year end. So I guess that comes back to that question of like, when do you apply it? Should they have to go back and redo their T2 or do an adjustment on their T2, or can they then apply it to the next fiscal year?
I was just going to say, I think Laura kind of spoke to this earlier when we said that this isn't something that I don't think we can answer now, but it's something we can, because I think it's kind of the same as the question you're asking.
Yeah,
right, about the T2. Unfortunately, my area, we're kind of like the T4 side, but we can again talk to our colleagues who do deal with this more directly, and hopefully get you guys an answer that you can give to all of your members soon.
Well, Craig, while we've got you on the T4 side, let me throw Jorag's question at you. We filed our T4s in January already before these new rules came out. Now what?
So this is regarding code 57 to 60, I assume. Generally, it's going to depend on exactly when they were filed, but we have looked at this, and the guidance that's around that refiling requirement is out there because I know the updated schemas for filing weren't available until early January. Anybody who filed before that date is not being asked to refile. If you're filing after that date, and again, I don't have the exact date off the top of my head, but again, we can get that for you. Anybody who's filed after that, once it was possible to file with the new codes, I think we are expecting that employers, if you filed middle of January or late January when that was available, we are expecting that they should have used these new codes when they did it. But again, if they filed at the point where that wasn't possible, we're not going to impose that unrealistic burden on employers to go back and do something now, right? Like we're trying to take a common sense approach, and obviously it's not going to maybe benefit everybody in every case, but hopefully there is understanding on our side in terms of that issue.
Well, speaking on behalf of lots and lots of business owners, I will say thank you for trying to take a common sense approach. That's much appreciated, particularly given the significant challenges businesses are facing this year. I've got a quick one I'm going to throw in on to Jennifer from a Jennifer. So here we go with the names. But what about plexiglass barriers businesses are putting up, expense or capital?
That is a good question. Maybe Janet can help me out here. I think it's dependent on whether it's being added to the structure or if it's like in place temporarily. And it also depends on whether you own the building or if you're leasing the building. Janet, can you help me out here?
Yeah, so it's a good question. We've got it quite a bit over the last several months. So obviously, every situation, like Jennifer hinted at, is different. If ever your situation is particular, you could always reach out to a liaison officer, and we'll be more than glad to meet with you either over the phone or through a WebEx. But generally, and again, it applies to everyone differently. If the plexiglass is there, obviously there's the goal to earn income. So obviously you're going to put it there so that you're able to keep your business open. That requirement needs to be met. It has to have a lasting benefit. So if it's in place for over a year, which unfortunately looks like it's going to be the case. And the third one is that it's an improvement, for your business. In that case, it would have to be a capital cost allowance. So you would take a portion of it over several years, and there's the AII, you know how good we are with acronyms, the accelerated incentive. You could take 1.5 times the first year and then subsequently the years after.
But Jennifer, to go back to the comment you made earlier, would it have to exceed that $700?
Sorry, can you repeat
to go back
that?
to the comment you made earlier about like what cost threshold would it have to exceed $700?
500.
Sorry, 500. I had 700 because that was the name. 500. So
yeah,
because glass not depending on
if it's so if it's if it's an under $500 thing, then I think that would still be applicable to that sort of expense.
Thank you. So hopefully that helps Jennifer, the member. Corinne, what else do you want to get to? I know we're running out of runway rapidly, so we'll probably let our CRA folks go in a few minutes, but maybe we'll sneak in 1 or 2 more.
Yeah, so a number of questions around CEBA loan, forgivable portion of the CEBA loan. And we've already sort of determined and clarified that you have to pay it back. You have to pay it. The forgivable portion has to be included as income in the year you receive the loan. Lots of questions to why then and not later on, but I think a better, and that's more of a policy question, I think, but the better question is what happens though if you claim it now, but you're not able to get the forgivable portion because you can't pay it back in 2 years, then what happens? You answer that?
Is Craig able to help out with this question, or is this one we'll add to our list of interpretation? Because it really, I think you got it right, Corinne, is that some of this is about interpretation of the legislation and wanting to make sure to get it right. So I don't want to misspeak and lead people down the wrong path. So I don't see Craig coming on there. So this is one that we'll note down for sure and get back to you in that package.
Okay, so but I think
it finally connected. But yes, I was just going to say I agree with Laura. This is one that we need to take a look at.
So I guess, just to clarify the question, it's that if I claim it now, which I'm required to by law, but I'm not able to pay back my loan by end of 2022 and therefore don't get the forgivable portion, how is CRA going to reimburse me or because I've already paid taxes on something that I'm not getting. So that's why a lot of people are even questioning why they have to claim it now, which I know is, that's the rule. But if you can find out what will happen in 2 years, then if they're not able to use the forgivable portion, and how will they be credited, or what will CRA do at that point?
Okay, perfect, got it. Thank you.
Okay, here's an easier one for you, CRA, Laura, I think. If there are no amounts for box 57 to 60, do we need to enter zeros in these boxes? This is a question from Carmelo.
So while I prepare, oh, thank you.
I can take this one. Sorry, I'm not on video. I can definitely take this one. So where there is no amount to report, because the XML tags are optional, you do not need to include that that particular code as part of your electronic file. So, but in the event that you're you need to include it just because that's the way that your system is built, then certainly just put in a 0.
Okay, so you can put in a 0 and that's fine. Great. Good. Okay, Corinne, we're running out of runway. So last one, and then we'll wrap up and thank our CRA colleagues.
I think I'm good. I think we're good on this point from my perspective. If you have anything else, then you can go ahead.
No, I mean, there's tons that I think we'll go away with, and we'll continue to work to answer member questions on these things. And I think members can see just how we're working very well with the CRA. They're working hard to get answers to your questions, just like we are. They have to interpret legislation, and so there are some challenges on that front. But I want to say a huge thank you to all of the folks from CRA. I don't know if Lori, Jennifer, if either of you want to make any last comments before we close out, and then I'll turn it over to Corinne to make a last comment.
I appreciate the opportunity to be here and to talk about some of the information slips and some of the changes that are coming up. I think it'll also help us be prepared for the French webinar counterparts next week, knowing some of the specific questions that you have and the line of questioning. So it'll help us prepare for that. But I really appreciate the opportunity. Thank you.
Okay, Corinne, maybe I'll turn it over to you for some last comments, and then I'll wrap us up.
Great, thanks, Laura. It's interesting what you opened up with, Laura, at the beginning, the Albert Einstein quote saying that there's nothing more complicated or difficult than the income taxes. And certainly, I think this continues to be true to this day. And I want to thank CRA for trying to help us decipher some of that. And clearly, there's still lots more. There's a lot of questions still out there, and we're going to do everything we can to get you as many clear answers as we can as quickly as possible. Because I know that right now it looks like those deadlines are coming. And so also just a reminder, and a few people brought it up about looking to get deferrals on those tax deadlines. It's something we are actively working on right now, and we're going to continue to push for that given the complexities and the many, many, many questions we're still getting. And hopefully we can start getting you some of those answers in the coming days and maybe week. And hopefully next week, Laura, maybe you and I can try to make sure we answer some of these questions that we can hopefully find some answers to as we go through the next week or so. So thank you again for attending. We really appreciate your time and coming here, and hopefully this helped a little bit to answer some of the questions for some of you, but we will certainly take note of the many questions that are here and hopefully bring you back some answers in the future. So thanks again for joining us, and hopefully we'll see you next week.
Thanks, Corinne. And I'll just say a final thank you to our CRA, to the many folks from CRA who are on this call. Really appreciate you coming on and helping to answer the questions. A couple takeaways for me. I heard a couple of you from CRA say common sense. I want to just come in behind that. I'm sure all our members really appreciate any that common sense touch wherever possible with these things. Second takeaway for me is also keep a log log everybody of what you're doing and the decisions you're making and the dates, because I think that will be very useful. And the final one is that my final takeaway is Einstein. I was channeling Corinne here too. Einstein was right. Taxes are complicated. Hang in there, everyone. We always love to see you on our webinars, and we will continue to try to get answers to the many, many questions that you have. Take good care. It's Thursday. It's Friday Eve, which is a nice day of the week, and the days are getting longer. We can count, at least that's something we can count on, and we look forward to, you can also count on us. We'll be here again as long as you need us, but certainly next week. We'll see you as many of you want to come and join us again. We'll see you next week. Thanks, everyone, and with that, we'll end the webinar.